Uh, Mr. Michele and myself will take you through this permanent establishment and qualifying present persons. So we had few other sessions discussing brief with respect to the entire corporate tax law, but now we thought of taking up only selective and important areas and to discuss a little bit more about those particular topics. So as part of that only we are conducting this session. Uh, let's quickly go through. So we are going to go through these topics during the session. One is determining the existence of a permanent establishment for a non-resident. This is going to be relevant for non-resident companies in UAE. And next, we will talk about the impact of having a permanent establishment in UAE under corporate tax law. And the second part of the session is going to be more on qualifying present persons and what are the conditions to get the status of a 0% corporate tax. And when do you lose the qualifying present person status and what is the impact of losing that? Of course, we'll also be answering or addressing some questions, whatever we have after our session. So this is how we're going to deal with. These are the topics that we'll be talking about. So I hope the screen is visible, right?
All clear. Yeah, we can see.
Yeah.
Thank you very much.
Yeah, thanks. So I will quickly rush through the initial basic concepts and then we'll get into PE and we talk more about the specific topics. So in UAE, generally the UAE is from the point of view of corporate tax, they divided it into various zones or areas. For corporate tax, the relevant areas are going to be like mainland companies established in mainland. And then we have free zones. When those free zones also divided into like financial free zones and other than financial free zones. So that's the classification of the free zones as such. And we also have offshore companies or offshore uh, areas where there is no physical presence of the free zone as such, but you could still have the license issued from the offshore agency or offshore. And currently, we have offshore by Zavza, General Prison Authority, as well as by Rakesh. So I don't know if any other offshore entity, offshore thing has come up recently, but yeah, these are the two prominent offshores we have at the moment. So why we are talking about this? Because there are certain provisions that will be applicable or will vary based on the place where the company is established. So that is the reason why we need to just have an understanding of this, how the UAE in total is classified for corporate tax purpose. And on right hand side, you can see the legal forms that we have in place at the moment. So even these are also going to be relevant for the purpose of computation of tax or applicability of various rules of corporate tax law, depending upon the type of the company or legal form of your establishment or organization, the applicability of UAE corporate tax will vary. So you can see on the first part or first section of this, like sole proprietorship, sale company, partnership, foundation, trust, representative office, and freelancers. All these are, though you may have license issued in the name of these entities, but for corporate tax purpose, these are not recognized as a separate entity or establishment. It will be the owners of those establishments who will be treated as taxable persons, and whatever income and then the profit that is subject to tax will be taxed in the hands of the individuals or the owners of these forms of the organizations. So,
sorry, Balaram. Just an obvious question, general question from the audience in regards to the like the left hand side of the legal form. No, when it comes to the partnership, for instance, you are we referring to the partnership between individuals, I suppose, and then and also what are the implications? Because are they liable for corporation tax or will be outside the scope of it?
yeah, so good question. Thank you for asking this, Michele. The partnerships generally are between the individuals. It could be also the juridical person being partner of partnership. But here, primary thing that we need to understand is that they generally refer to unincorporated partnerships.
I see.
Okay, so which are not recognized as a separate entity as such. So in which case, whatever profit that you derive out of this unincorporated partnerships, so the partners will be held liable or will be considered as taxable persons, and the income derived by this partnership will be taxed in the hands of the individuals or the partners, not in the hands of the partnership firm.
I see.
And they are not exempted as such. The only thing is that the people who will be subject to tax are going to be different than not being subject to tax. So that's the only difference. The
I
income
see.
derived and the profit derived by these all establishment will be still subject to tax, but they are not subject to tax in the hands of those establishments, but they are taxed in the hands of the owners or partners of those establishments. That's the difference.
Okay. Yeah. Very clear.
And yeah,
Thank you.
and you can see on right hand side of the legal form table, all these entities like limited liability company, public shareholding companies, private shareholding companies, and so on. So they all are considered or recognized as independent entities, and they'll be subject to tax in the respectively like in the as an independent entity. And owner's taxability will come later on, which we will discuss if required. But yeah, as such, primarily these are the entities will be subject to tax directly. So I invite Michele, if you have any comments on this to share more, otherwise we'll just get into the next
Yeah.
points.
No. Essentially, when it comes to, it's important to divide, the legal forms. No, obviously, the term subject to tax can be confusing, for the audience, for the people that they are not really into. The taxation procedure. I mean, being subject to tax doesn't really mean necessarily that you're gonna be taxed, isn't it? So essentially, as in tax with the tax with the proper tax rate, as you can see, like starting from the geographic form, and when it comes to mainland and free zone, you can see that mainland, yes, is more subject to tax as opposed to free zone, but then there are like few differences there. But the terms, the term subject to tax is really difficult to interpret if you are not in the field. I don't know if you agree, Balaram.
Yeah, you are right, Michele. So yeah, so it will be taxed. What I mean to say is that it will be taxed. So so the legal form of the organization or establishment is going to be relevant to decide whether the tax will be levied
Or not.
by recognizing the establishment as a taxable person, or it will be levied on the owners of the entity. That's the only difference that we are talking about, but it will be taxed.
Perfect. Okay, perfect. All clear.
Yeah, just moving it forward. So now let's quickly look at who is going to be subject to tax. Uh, on left hand side, you can see the resident companies or individuals who will be subject to tax, and right hand side you will see non-residents. So when we say residents, so primarily it is the individuals who are in UAE or UAE residents. With respect to the companies or corporations or juridical persons, it is those companies which are incorporated in UAE. So primarily those will be considered as residents, and the entities which are incorporated in UAE, there also we have like entities which are incorporated in UAE and in the mainland, entities which are incorporated in the free zones. So that can be a classification as we have seen in the previous slide as well. So all the entities will be subject to tax or will be taxed in UAE as long as those establishments or entities are incorporated in UAE, whether be it in mainland or in free zones. So, and there are entities who are incorporated outside UAE. Legally, they are incorporated outside UAE, but however, if those entities are effectively controlled and managed from UAE, for corporate tax purpose, they'll be considered as residents in UAE, whereby they'll be subject to tax accordingly. So we will look into this particular concept more in detail because Michele will take us through more on those permanent establishment rules and other conditions to be met or to look at to determine this. But yes, the concept is that though the company is incorporated outside UAE, but if that is being controlled, effectively controlled and managed from UAE, then it will be considered as a resident person for corporate tax purpose in UAE, and it will be subject to tax requirement. Quickly to look at the natural persons, if you are conducting any business, uh, whether it is incorporated or not, whether you have license to conduct those businesses or not, you will still be subject to tax as long as you are conducting any business or business activity. I'm not getting into details of this. There is a clear guidance given on this. There are a few areas which are not very clear, but still, I mean, as we evolve, as the law evolves more and more, as the FTA releases more and more guidances, we'll get to know more about it. But as of now, if an individual is conducting any business or business activity in UAE, whether you have license to conduct those business activities or not, you will be still subject to corporate tax. Needless to say that whatever income you generate in individual capacity, or you are an employee and you're getting salary and related income, that's not going to be taxed under corporate tax in UAE. So the second part is more about non-resident persons. I'll let Michele talk more about that with respect to non-resident companies. Michele, if you
Perfect.
want to take it over. Yeah.
Yeah, of course. Thank you very much, Balaram, to clarify those aspects, especially when it comes to giving a broad overview of what's going on in UAE, because it is evolving. It is, like going forward, and it's getting closer and closer to the Western European approach when it comes to tax. Yeah, let's focus on the non-resident persons that are mainly, the one that the focus of today when it comes to permanent establishment. How do you determine the tax base of a non-resident in the UAE? The general approach is based on three steps mainly. The step mainly are when it comes to permanent establishment, that we'll go through this concept later on in the session, as a nexus, for instance, in the case of the immovable property in the UAE, and then also when there is an income derived or paid that is attributable to the permanent establishment in the UAE. So all those 3 points, any of those 3 points are generating, tax. I mean, like tax liability, corporation tax in this case, liability in the UAE. So it is all based on what are, first of all, the activities attributable to the non-resident. What is the present of those non-resident person? How do they become taxable person? It all goes around the corporation tax concept and liability in the UAE in this case.
Yeah. Yeah.
Yeah, if you
Okay.
want, you
Great.
could you could move on. Even like the
Yeah.
second
Sure.
slide
Sure. Sure. Yeah.
shows what we just said. No, those three main points. UAE source of income. So the source of income has to be attributable to a permanent establishment of a non-resident legal entity. Let's say, for instance, a non-resident legal entity would be, for instance, a UK public or limited company that is approaching into the UAE market. The income attributable to a PE, which is a non-resident in the UAE, is basically similar approach. For instance, when like it's invoicing or charging and receiving payments from a Dubai entity that could generate permanent establishment. And the last one is when there is income attributable to a nexus of a non-resident individual or person in the UAE. For instance, as we said, when there is income that is generated from any assets, especially immovable properties. When immovable properties, let's say for instance, a company in the UK has an immovable property in UAE, which is like a property, and this property generates income that's subject to tax base, corporation tax base in the UAE.
Yeah, I think this has actually been a very big, I would not say eye opener, but yeah, it's a kind of new concept for us because we in UAE we were thinking that the immovable property income may or may not be subject to tax, or at least it will not lead for having a taxable person or considered as a taxable person in UAE. But during the recent decision that has been issued by the cabinet, so they clearly mentioned that if any company or any non-resident person is having any more property and generating income out of that, so he'll be considered as a taxable person and he will have to comply with tax rules in UAE. And I think the first point, which talks more about UAE source income, which is not attributable to PE, as long as it is considered as UAE sourced income, you will still be subject to tax being a non-resident person. If you are deriving any revenue from a resident person in UAE, a non-resident company is providing some service to a resident person in UAE. So you will be, as a non-resident person, will be considered as having UAE sourced income. So whereby you will be subject to tax. That income will be subject to tax. But
Yes, yeah.
yeah,
Similarly
here,
to the property, like sourced income. If you generate trading income, you do trading in the UAE, and but you are not resident in the UAE, so you live in Europe, you live in the US, but you still generate income coming from the UAE, that will be
yeah.
subject to tax, isn't it?
Yes, the only difference that I want to highlight here is that in the case of immovable property, so the owner of the immovable property, though is a non-resident person, becomes a taxable person in UAE, which means the other compliances like registering and then submitting a corporate tax returns, all those will be there. Whereas if you have UAE source income, like you are providing service to a company in UAE, being a non-resident person, and subject to not having any permanent establishment in UAE, your income is going to be subject to tax, but you are not considered a taxable person. That's the only difference, which means non-resident person who is not having a permanent establishment and only getting UAE source income, their income will be subject to tax, only that particular income, but in the form of withholding tax. But whereas if you have movable property and you generate income in that, so you are becoming a taxable person and registration and all those things will come in place. It will be similar even if you have a permanent establishment in UAE. Once you have
Sorry,
permanent
Balaram.
establishment,
Sorry to interrupt you.
yeah,
It will be nice if we expand this point, as in, okay, you are subject to tax, but you don't have to apply for any license. No, that's in practice. How would it work? Like you would. Like the UAE government would, uh, in somehow apply the withholding tax, but you won't be able to. You don't require registration, isn't it?
that's right. Yeah, that's right, Michele. So your income derived or you have income which is considered as UAE sourced income. It is only subject to tax in the form of withholding tax, and you are not required to register, not required to have any license in UAE, or need not to comply with any other compliances from corporate tax point of view. But the recipient of your service is going to take care of this withholding tax. We will see in the future slides as you can discuss that withholding tax is 0% at the moment. But yes, so you will be subject to tax for your income sourced from UAE, but not being considered as a taxable person. So that's
Very
what I
good.
just wanted. Yeah,
Very good. Yeah, no, all clear from my end. Let's move on
yeah,
assessing,
yeah.
the
Sure.
permanent establishment. What's the, what is the definition of a permanent establishment in general? Permanent establishment is identified as a permanent and continuous presence of a company, a foreign company in this case, that is creating throughout a certain period of time into the UAE. So how do I identify the permanent establishment? Is essentially an enterprise, a firm that is able to generate future economic benefits from the activity in UAE and is required to pay corporation tax on the profit that is making in obviously the host country. So imagine like a European company that decide to invest in UAE, and by investing in UAE, there are certain level of activities that have to be considered when it comes to generating a permanent establishment. No, the common ground when it comes to permanent establishment in UAE is it's got like these three famous tests. No, when a non-resident person, let's imagine a European company that would want to invest in UAE, generate a fixed or a permanent place in UAE. So imagine like the most common example would be, okay, I'm going to UAE. I want to open a representative office, and I want the representative office to be there and conduct business in there and expand, my UAE market. Okay, when another test, the second test is when it comes to a non-resident person who has habitually exercised or usually, like he's through authority to another person that could generate permanent establishment. For instance, like I got
Agencies.
sorry.
Sometimes we call it as agency test or agent test. That's what
Exactly.
I
That's the agency test. For instance, when it comes to was exactly spot on, because that was what I wanted to do. But the example I wanted to give, essentially, when again an European company decided to decides to invest into the Dubai market through like various agents. No, and this is a big problem when it comes to generating a permanent establishment, because the independency of the agent would
yeah,
have to be determined. No, so that's a very important point, and this could lead to a permanent establishment generation in
yeah. So
UAE.
because here, when you say independence test for agency, so can you just elaborate a little bit more? Like, no, what happens if the agent is independent, and what happens if the agent is not independent and is fully dependent and non-resident?
Exactly. So when under the Organization for Economic Cooperation and Development, I mean the OECD model, like it shows guidelines when it comes to assessing the independency of a person that works on your behalf. For example, when it comes to an agent, if you are working and you don't have the benefit of an employee in UAE, for instance, if you don't have uh, the common example are like company car, if you're not given holidays, if you can be substituted by another person, that gives you independence, that gives you the possibility to work autonomously, sorry,
Yeah, yeah,
independently. And that's very important, because if in the case of you having direct contact with the company, so enjoying the holidays that the contract or a contract of employment could give you, company cars, even the phone, company phone, and all the benefits given by the mother company, that will become one of the conditions of generating a permanent establishment, because you are
yeah,
acting on behalf of the non-resident company in this case. So
yeah.
that could be another important element.
Fair enough.
Non-resident person who has any other form of nexus in the UAE, we already talked about it. It's the main example is an immovable property. If I own properties in UAE that they are generating income, and I doing it for the purpose of business, because obviously the scope is very important, that would be considered as as a permanent establishment as well.
Yeah, yeah. Fair
Okay,
enough. Yeah.
so those are the main 3 points that I would want to consider when it comes to determine, the permanent establishment, and those points, they go hand in hand with the standards.
Yeah.
The general standards set by the Organization for Economic Cooperation and Development, which Dubai and UAE, Abu Dhabi, they are getting aligned even more in the later year. So
Yeah.
essentially, when it comes to the standards, what we need to consider, and that's the main point of the OECD, is the place of effective management. So place of effective, if you don't mind moving on, Balaram,
Yeah, sure.
the place of effective management is a crucial point, is the main point when it comes to generating a permanent establishment in UAE as well. What does it mean, this place of effective management? Again, there is no straightforward answer to it. It is set on Article 4 of the Permanent Establishment Paper of the OECD. But just to give you an idea, general idea, is where, managers, people that they are making strategic decision, people that they have, like power to run a business, to make decision that could change the strategy of the company, are located, and where are those strategies made. Common example, like one of the director of a business in Europe, of a non-resident business, Dubai non-resident, UAE non-resident business in Europe, decide to relocate to Abu Dhabi, to Dubai, to UAE, and in there, this will carry all, the decision that are commercially relevant for the company. So imagine a person who lives, a former director of a non-resident business who lives in Dubai, in UAE, and decide to set up, like branch in there.
Yeah.
So making relevant decision. And that's the key bit when it comes to the PE. Also, it's not just that, it's also, it's also important to consider, that's the most obvious example, no? But even
Yeah.
when it comes to
Now,
other,
I have a
like,
classic example, Michele, if you allow me here. In
go ahead,
Dubai,
please.
UAE, what happens is generally some of the group companies or major businesses, what they do is that they have their businesses in UAE, but the holding company is generally established in BVI or Panama or
Okay.
elsewhere outside UAE. Okay. And in that BVI company, most of the directors and owners generally they are based out in UAE, in Dubai. So in principle, if you look at that, it appears that it is being actually managed effectively. The BVA company is effectively being managed from Dubai because your directors, your shareholders, everyone is sitting and operating that BVA company from UAE, from Dubai. So that BVA company effectively becomes a permanent place of effectively managed in UAE, and that could become subject to tax. So if I put it in other way around, so this is very important thing to consider for most of the businesses. For non-residents also it applies other way around. Like non-resident having a branch in UAE, but that is effectively managed from, let us say, from UK. So UK
Yeah.
may say that that branch is having a, through branch you are having a PE, permanent establishment, and you'll be subject to tax. Generally branches are not included, are included as part of head office. So looking at this permanent establishment concept from the point of view of effectively being managed and controlled is going to be important. And as you mentioned, it is not just one question, answer to one question. It's going to be a series of things to consider to determine whether you are considered as having permanent establishment or not. Whether you are effectively controlling or managing a particular company from other place or not. So it becomes a
Totally.
little bit challenging. Yeah.
There is, again, when it comes to permanent establishment, there are guidelines. There is never a straightforward answer to it. So it's always going to be debatable, of course, because technology, the advancement of technology, and the complexity of the world that we are living in, they make it even more difficult to adhere to follow those guidelines. Essentially, and I like a Balaram example because the vice versa example, it's even more important. A BVI, a tax haven based company that is investing, or these are they have people like relevant people, generally directors or owners, that they effectively live in Dubai or in Abu Dhabi or in UAE in general, and they conduct business from there. The UAE government could, uh, say, look, you are generating a permanent establishment, so you're effectively, your company should have been set up here as opposed to any tax haven or any BVI or Panama or whatever state.
Yeah, yeah, I
Okay, so
agree to you.
it is a
Or at least they
very
will say,
important point.
yeah, yeah. So they will at least say that though your company is registered in BVA company, but whatever income you generate from through that BVA company, the extent which is effectively managed from Dubai or Abu Dhabi should be taxed in UAE. That's what
Yeah,
that's what
the
that's what
activity.
yeah.
No, I mean, I made a more obvious example. Imagine, like, there are three people, they've set up a BVI company, but they all live in Dubai. Mainly all the activities are run from Dubai or from Abu Dhabi or from UAE.
Yeah,
What's
yeah,
going to happen is that, the what becomes legit is that there should be an incorporation, a company incorporation in Dubai or in UAE, as opposed to any other country. If you effectively, all your management personnel lives in UAE as opposed to another country, that will
yeah,
become legit. No,
yeah, yeah,
and then there are, other points that are worth considering, because, for example, like the obvious one would be a fixed place of business. No, if I have a fixed place of business, as I said before, an office, I want to have an office, an address, a physical presence, essentially, opening a bank account, receiving money from where I am in UAE. That would obviously generate a permanent establishment if activities, if it's related to business activities. No, I'm not
mhm,
talking about a person who's relocating and works
yeah,
as an employee for a company, of course. When it comes to activities by employees directly related to revenue creation, that's another debatable point, isn't it, Balaram? Because when it comes to revenue creation, activities like um, general activities like uh, marketing or temporary sales activities, they are not considered as a PA, as a PE, sorry, a permanent
yeah,
establishment
yeah,
entity. Why? Because essentially, if I come to the UAE and sell my product and leave after 2 days, I'm not going to be subject to corporation tax, because the timing is very short. Okay, I'm essentially advertising my product, going there, even for the, I don't know if you all can recall the expo. No,
mhm,
I'm coming to the expo. How long does it last? 2 weeks. I'll come, just stay 2 weeks and then leave. I'm not gonna be subject to any Dubai corporation tax.
yeah, yeah,
Obviously, this is when it comes to permanent establishment. There will be a big question mark when it comes to VAT, and that's a
mhm.
different story. I'm sure we're going to talk about it in the in future
Futures,
sessions.
futures, yeah,
Yeah, but when it
mhm,
comes to corporation tax and permanent establishment, there is nothing you can do
yeah,
unless like you stay for longer period.
yeah,
And and uh, and obviously those are ancillary activities, which we're going to talk about later on in in another slide. But
yeah,
essentially, the activities instead that they are making revenue for the foreign company could be related to consistent maintenance, for example, of a product. So imagine I sell, I don't know, television, TVs in Dubai. I'm Samsung. I'm based in South Korea, based in everywhere in the world pretty much. Let's imagine Samsung is not based in the UAE, which is
Not the
impossible
case.
nowadays,
Yeah,
but it's not the
yeah,
case. But imagine, like, any other television-based company. I decide to sell in Dubai, in UAE. I sell televisions. Okay, my products will come from Europe and go to Dubai. I don't have to worry about it. If instead I provide, like a full-on customer care. For full-on customer care, I mean when I have technical people coming and fixing television on my behalf and staying on a place, staying in UAE, that would be subject of like generating this famous revenue creation we're talking about.
yeah,
Again, other points are when it comes to sufficient time frame dictated by the tax treaty and the local laws. Obviously, as I said, again, in this case, this is a very gray area. We'll go through it later on. And then when there is an actual control and direction of employees by the parent company, the foreign parent company, again, very carefully, it's all
yeah,
about trying to understand, for instance, like I like to give example because like this we can expand. But when it comes to actual control and direction of employees, is essentially those employees, they are based in Dubai. Okay, they only do administrative activities. But me as a director, I'm based in Europe. I come and I do the majority of negotiation, drafting, and signing contracts in UAE, and then generate revenue from there. This is another element of revenue generation.
yeah,
I will be subject to corporate tax if
yeah.
the activity is ongoing. It's not a single contract. If it's a single contract, come over, I'll sign the contract and I leave. That's different. But if I have my employees, which I control and direct from my foreign entity, from my foreign country, but I come there and I do an ongoing activity, it's something that is ongoing and is usual, that would generate corporation tax
Yeah.
liability.
Yeah, in fact, Michele, I have a similar example to say so. One employee of a non-resident company comes to UAE and he incorporates one sole establishment or sole proprietorship in his own name, not involving the parent company as part of the legal structure. But all the instructions are given by the parent company, and the employee who is the owner of this sole establishment in Dubai, he performs or conducts those activities based on the instructions of the parent company. So, though the company in UAE is considered as not owned by the parent company, but still the owner of that particular company is an employee of non-resident and he is acting solely based on the instructions of the parent company. So that non-resident company may be considered as having permanent establishment through this employee as well as that company, a particular company established in Dubai. So it could fall into that. So though if you look at it from the far, you feel the non-resident company and the company that is established in Dubai are independent, they are no link. But if you look at the transactions and the way that is being operated, it is closely held and it is acting as an agent, and that non-resident can be considered as having a permanent establishment in UAE through this particular company and employer.
That's a very good point, Balaram. I mean, I guess you can move on with the slides because that's actually what we're talking about: permanent establishment, actual control and direction.
Yeah,
We
sorry to
already
jump in.
talked
Yeah,
about it.
yeah,
No,
yeah,
no, that's perfect. Don't worry at all. And that's a very good point Balaram is making, because that's something that usually is happening in Dubai. So imagine like sole proprietorship, but even sole tradership, like even people that they're coming only as a single individual, they try to elude the system, and they don't they don't want to show that there is a control or direction. We're going back to the concept of independency we talked about when it comes to agency. In this case, is a similar concept. No, when you are actually an employee of a company, and that's big. This is becoming, like the famous concept, our famous concept, the concept that we like, Balaram, no, the substance over form concept, no.
Yeah.
Essentially, what are you doing as a person? Or are you an extension, a branch of the foreign entity or not? That's a question you should they should ask themselves. These people that they're doing that, but this
Yeah.
is again there is a high risk of generating corporation tax liability.
Yeah.
Moving on, the factors, just be conscious of the time. The
I know
factors for
that.
generating the permanent establishment in UAE, they are similar to what we just discussed. No, essentially when it comes to staying longer time, general rule of thumb is the more than 6 months, 6 months and 1 day. That's for general rules, but again, those are general rules and need to be considered on a single case case by case evaluation assessment.
Yeah.
No, so
Yeah.
it is the people that they are like traveling a lot to UAE, generating business to UAE. They need to be in UAE. They need to be very careful. They need to consider like all those aspects when it comes to establishing an entity or not,
Yeah.
and being liable of corporation tax. So again, we talked about the revenue creation. Revenue creation, it really depends on what you actually doing. No, so the activity are very important when it comes to generating,
Yeah.
permanent establishment or not.
I believe you have detailed discussion on this ancillary activities that may not be considered as establishing PE, even if they are conducted in UAE. So I
We
think
will
having
get to that.
clarity on those, yeah,
Yeah,
having
we will
clarity
get
on
to
those
that.
ones. Yeah,
I
I
think,
think
yeah,
it's,
I think it's. I mean, these slides again. It's showing what we talked about. That will be good for like the audience
yeah,
reference, so they'll have everything
yeah,
on their end, and yeah, moving forward, there are specific factors that they generate a fixed place of business. Generally, there is the place of management, the effective place of management, which is the main one. Again, the branch is in generating, like the extension of a foreign company. Branch could also be an LLC company instead of a branch. No, because a branch is the concept of a branch is essentially um, connected it is the same legal
parent
entity
company.
of the mother company, isn't it? So
Sure, yeah. Even in
could
corporate
be
tax law, they clearly mentioned that generally branch is considered as part of the head office or main company.
exactly
So it could only,
branch.
it could only create a kind of issue if the branches of a foreign company or a UAE company is having branch in outside UAE. So those cases could be, critical to look at. Are you forming a permanent establishment through that or not? So that's a
Exactly,
critical
can
thing to
generate
look
a
at.
branch.
Yeah.
But you can also be a permanent establishment through a separate legal entity or owned 100% by the mother company. So yeah, branch is an important concept to determine the permanent establishment, but you could as well be, an LLC company, a separate legal entity owned 100% by the foreign entity.
Yeah.
Factory, I think is self-explanatory, unless you guys have any question. The
No.
office, again, office is quite um, easy to understand, but in this case, it is important because sometimes this could be misleading. Office could be also a residence of an employee.
Yeah.
An
Yeah. This
employee
is.
working from home, especially nowadays, it's very important. An employee working from home, could generate a permanent establishment. Could be the office of the person, because imagine I'm working 9 to 5, Monday to Friday. I'm from my home, from working from my home, and in this case, this could be considered as an office. Workshop, for example, a mechanic based in UAE, that would obviously generate a permanent establishment. And the last point, going back to the nexus we talked about, land, buildings, real estate properties, they definitely, if used for business, they definitely generated a permanent establishment in UAE. Again, the fixed place of business, the place covered, the places covered are installation or building construction sites, mine, oil and gas, that for extractions, gas, oil extraction, they always generate permanent establishment, because effectively you're gonna be there for quite a while, isn't it?
Yeah,
And
that's right.
you just don't do just don't stay there for 2 months, because it's not going to be worth it, I guess. And when it comes to building and construction sites, there is an important aspect of it, sealed by a decree from UAE, and that's something probably in the future would be nice to have a debate around it. But the UAE decree says that you must stay less than 6 months in the UAE territory for construction or building purposes, to avoid permanent establishment generation.
Yeah.
Obviously, we are giving it for granted that you are a non-resident person. Okay, so not to be taxable, in simple terms, not to be corporation tax liable, not to be taxable in UAE, you should stay less than 6 months. Okay.
But I also remember that you are mentioning 12 months elsewhere as well.
Yeah, that's the funny bit, because we were discussing with Balaram before the webinar about it, and this is a big question mark, because, for instance, we have double taxation treaties, no, and one of the treaty, especially between the UK and Dubai and UAE, sorry, it says that on Article 5, it says that a building site or construction or installation project constitute a permanent establishment only if it lasts more than 12 months. So, general rule of thumb, when it comes to double taxation treaties in general, those are superseding, local tax laws, especially when it comes
it
to
is.
the UK.
Yeah,
But
it is same even for UAE Corporate Tax Law also. In the decree law, they clearly mentioned that. So if there is any contradiction between the double taxation avoidance agreement or treaty compared to the decree law rule, so then it is always the double taxation avoidance agreement on the treaties which is going to prevail. So in the case of
okay,
UAE
okay.
and UK, so that means it's 12 months that is going to be relevant than the 6 months if you have to establish a P.
Very good point. So generally, just for the audience to understand, is essentially by default, the UAE says 6 months, more than 6 months are generating a permanent establishment if there are like countries that they don't have double taxation treaty, or if it's not specified in the double taxation treaties. By default, it's 6 months. If not, there is if in case there are double taxation agreements, the in this case, in the case of the UK UAE, the 12 months rule applies. So very good point, Balaram. I mean, moving on again, going back to what we were saying about the preparatory or auxiliary activities, the good points are trying to understand again when you generating corporation tax liability. So when it comes to, like preparatory or auxiliary activities, usually those are not, corporation tax liable. So no permanent establishment is a permanent establishment exclusion. As you can see from the graph, essentially a foreign company um, is using a foreign place of business for a limited time, for instance, limited marketing and promotional activities. We talked about the Expo, for instance, a company, European company came for Expo, and advertised, their products, came for 2 weeks, 1 month, and then leave. In that case, no need of permanent establishment.
Yeah.
Okay,
Yeah.
so preparatory and auxiliary are similar concepts. Essentially, they are related to the activities carried out. If I carry out support or general activities for a limited amount of time, or that they are not relevant when it comes to revenue creation, those will not constitute a permanent establishment in UAE.
Yeah,
Okay.
especially I like the point that performing the marketing research. Most of the companies, what they do, foreign companies, they come and perform marketing research by sending their employees. And just to this is just to understand whether they can get into the business in UAE. Is the market good enough for them to get into UAE or not? So obviously, it's something that is not directly generating any revenue to the company or the foreign company. It is only a study, so which obviously would be considered as maxillary in nature, and it would not attract your PE examination thing.
Very good. Yeah, moving on again, with together with the preparatory and auxiliary activities, we get the goods. No, goods. Common questions from our clients are essentially asking, like what is generating a permanent establishment when it comes to selling goods
Yeah,
from a foreign company. Imagine if we are a foreign company selling goods to Dubai, only looking after transport and delivery. This is not considered as having a permanent establishment in UAE. So it's important to distinguish what's going on when it comes to goods. Even the storage, even the display of goods for solely for marketing purposes won't be enough for generating any permanent establishment and paying UAE corporation tax. Be
yeah,
very careful though, because keeping the stock of goods, displaying as for the example of the expo, but if I want to open a little, let's say, shop that is showing and selling goods, in that case, you would go under the permanent establishment. So there is always a fine line, like a line between those those activities generating permanent establishment and not. So
yeah,
this has to be treated carefully as well. But
yeah. So
essentially,
that's what is the challenging. I think that's why you need to carefully observe and analyze whether it would be falling under PG permanent establishment or not. So a small activity added to the present or existing one or removing it could determine whether you have permanent establishment or not. So you always need to be very careful in the times where you have to expand your business, how you're operating as a foreign company in UAE, whether you'll be falling under permanent establishment determination or not is very important to look
indeed. So again, permanent establishment is just the tip of the iceberg,
at.
as
Yeah,
we say, because again, not just permanent establishment has to be considered, but also if a company in UAE or in a foreign country generates, withholding tax. No, withholding tax, and then Balaram could validate this concept, is
yeah,
kept at 0% in UAE. But here it's always we have to be always conscious of the double taxation treaties. No, so by default, in general, it's 0%. Should you know um, a percentage from a foreign country be generated as a withholding tax, these could be deducted from the corporate tax due. Okay, so this is a very important concept. In some cases, and then it really depends on the countries. In some cases, the excess should be refunded to the taxable person. In other cases, you lose it. What's the case of Dubai, Balaram, when it comes
Yeah.
to credit or withholding tax?
Yeah. So at the moment, from the point of view of UAE, as you mentioned, the withholding tax is mentioned as 0%. So which means any company outside UAE, if they are providing any service or selling any goods to UAE company, so if that particular company is not resident in UAE, foreign company supplier, so the UAE company is expected to deduct withholding tax. So at the moment it is going to be 0%, which means UAE company is not going to deduct any withholding tax and they will be paying full. But let us say in future if the UAE government comes up with a withholding tax of 10%. So in which case, if a foreign company is supplying some goods to UAE company, the supplier being a non-resident in UAE, the customer who is in UAE is expected to deduct 10% towards withholding tax and pay only 90% to that particular foreign company. And the other concept clearly mentioned is that if that particular foreign company in the same year later becomes a taxable person within UAE, so whatever withholding tax that is being deducted, as in my example of 10%, so that could be taken as a credit against whatever tax payable by that foreign company in UAE after becoming a taxable person in UAE, so can be taken as a credit. So not only that, if that withholding tax paid in UAE by a foreign company after becoming if it becomes a taxable person, if there's any excess of withholding tax which is not adjusted against tax payable by them in UAE, that could be applied for a refund. So it's very specific that this withholding tax is paid by a foreign company, and that foreign company becoming a taxable person in UAE in the same year. And if they adjust this withholding tax already paid, and there is a still excess amount to be recovered or not adjusted, that excess amount can be claimed as a refund from UAE. So that's what is the specific point that you are mentioning. The other
It's
way
very good,
is, yeah,
very good.
the other way is that if UAE company is paying any withholding tax on an income which is included in UAE out of the income that is generated from outside UAE, so that withholding tax paid outside UAE is going to be given as a credit for UAE company. So I think you are going to have an example to look at that, but that's what is the concept of
Yeah,
credit of withholding tax.
let's show the example. Essentially, the only thing to add into this, and we can skip this because essentially we talked about it already. The only extra concept to add into this is that for the UAE, and this is not a really common no in other countries, but for when it comes to UAE and when it comes to the application of withholding tax, there is no registration or filing obligation. So at the moment, the UAE people, the UAE companies are fine, but this is usually not the case. For instance, when it comes to the UK, you should communicate, you know, those withholding tax and how you withheld tax from UAE, in this case, UK to UAE, to the HMRC, to the UK tax office. When it comes to UAE, in this case, at the moment, at least you are exempted, so that's fine. Giving the example Balaram is showing at the moment, essentially, as he's just said, you have a cumulative revenue of 3 million. You have cumulative 2 million and 200 expenses to be deductible. Then again, deductible expenses is a whole different topic. I wouldn't go,
Yeah,
I
yeah,
wouldn't
that is.
expand in this case, but the taxable income in Dubai, in UAE, in Abu Dhabi is 9% of 425k, because that's the difference. And again, this is something I think Balaram will expand later on
Yeah,
in the
yeah.
session, and that will generate 38.250k
38,250
of
is the taxable
taxable, yeah, taxable income. So sorry,
tax payable amount. Yeah,
tax to pay. Sorry. Then again, you have some tax you paid somewhere else, like not like in a foreign country, which amounts to 5% for service provided to a foreign country. You got a withholding tax in there of 5%, which is 10k. The net payable in UAE would be the difference between the two, so
yeah.
20k to 50 to
Yeah,
be
Michele, here
precise.
one important thing that we need to look at is that whatever tax that you paid outside in UAE, so there are certain other conditions also to comply with. Like, is that tax rate that you paid outside UAE, is it more than 9% or less than 9%? So you have to look at the lower of those two, and then only take the credit of that lower amount. And
That's
we
a
need to
very
look
good
at the
point.
effective tax
That's
rate instead of just. So
that's a
they
very
mentioned
good
clearly
point.
that. Yeah,
The
yeah,
difference between the two. Obviously, it really depends on how much tax you will pay. For instance, in the UK, you go up to 50k, 19%. But if you paid 19%, the UAE government won't allow you to deduct the full 19% because it cannot
yeah.
offer you a refund.
Absolutely,
But
yes.
you will be 100% covered on the 9% you have to pay. So in this case, if it's less foreign tax paid of 19% or on a service provided to a foreign client, you will be only covered on the 38k you can see as a tax payable in UAE.
Yeah, true.
Sorry, Balaram. I can see already some question when it comes to qualifying, I mean, free zone and mainland, when it comes to permanent establishment there. I would, I mean, just, I would say like it's good if you go through the presentation of the qualifying free zone person, and then like you can integrate what is been asked already. So we can
Yeah,
already
sure.
cover it and make it, as short as possible, being conscious
Yeah,
of the time.
yeah, sure. We'll try to wrap it up without taking too much time. Qualifying prison person, I'm sure in UK it is not very popular thing to be there, but in UAE, especially, you have n number of free zones. There are about 40 plus free zones at the moment we have in UAE, and each of the free zone have got their own specific objective. It's they offer too many other benefits also if you have a company established there. One of the primary the benefit that has been offered is tax-free period. So they have given n number of years, and if you are doing any business by complying with whatever regulations they mentioned in the particular free zone, so you'll get a benefit of a free tax period. So that is the one of the main advantage or benefit offered by most of the free zones. And of course, it's not very clear or straightforward that you by being a company in a free zone, you'll get straight 0% tax on your full revenue or income or profit. There are certain things, certain conditions to be complied with, and you have to do business in certain way. Then only you'll get that benefit. So let us quickly look into that. And Michael, wherever you have any point to note or anything to ask, you feel free to jump in.
Of
So these
course,
are
of
the
course.
these are the primary conditions to be complied with if any free zone company by establishing their company in free zones. By default, as I mentioned, they do not get the benefit. They have to comply with various conditions. So these are the main conditions that they need to comply with. The first and foremost thing is to have to maintain adequate substance in the state. So a free zone company should maintain adequate substance in the free zone. Now it is specific. So what do you mean by maintaining the substance, adequate substance? So they clearly mentioned that they should undertake the core income generating activities in a free zone. So it could be in the same free zone or in any other free zone. But whatever business you conduct, so related to that particular business, the core activities, the core income generating activities should take place within the free zone. That's first thing. Second thing is that you also need to have adequate assets being there, employees being employed in that particular free zone or in any free zone, or you must be incurring enough amount of operating expenses in the free zone. As long as you have this adequate assets, employees, and operating expenses being maintained in a free zone, so then you are considered to be meeting the condition of having adequate substance in the free zone. So that's first condition. Second condition is to derive qualifying income. So they have mentioned detailed rules with respect to what is considered as a qualifying income and what is not considered as a qualifying income. We'll look into that in our further future slides. But yes, this is one of the conditions to comply with. A free zone company, to get a benefit of 0% tax, should derive qualifying income. So then you also have a de minimis requirement, which we will look into that. So this mainly talks about if you have income generated out of the activities which are not falling in qualifying activities, what do we know? What is the status? So yeah, you need to comply with this de minimis. We'll look into that particular condition in future slides. The other condition is also to maintain audited financial statements. You as a free company should maintain audited financial statements for your records to get the benefit of this qualifying free person and get a 0% tax benefit. You also need to maintain or comply with the arm's length principles and transfer pricing requirements. If you are a company which is part of a group or you have related parties and contract persons, whatever payments or transactions that you do with those related parties and contract persons, you should make sure that you're complying with arm's length principles and transfer pricing requirements. So there is it is again a detailed area to look at. We will not be able to cover that in this short period, but yes, that is one of the important one to comply with to be able to get the benefit of qualifying prison person status. And of course, another important thing is that you as a prison person or a company, you are given a choice whether you want to be elected to be a qualifying prison person or you want to be subject to tax like a mainland company. Wherein, when I say mainland company, you'll be subject to tax at 0% tax up to 375,000 dirhams and 9% in excess of your 375,000 dirhams profit. So if you as a prison company want to elect for this particular tax regime or taxation, then you will not be eligible for a qualifying prison person benefit. So these are the conditions that you need to comply with to be able to get the benefit or status of a qualifying prison person. And if you're not able to meet any of those conditions mentioned above, then in the year in which you lose or you are not able to maintain or meet the conditions, you lose the status of this qualifying prison person. Not only in that particular year, but in next 4 years also, you will not be able to get the status of this qualifying prison person. So which means you will be subject to tax and a normal rates for that particular year as well as for the following 4 years. So this is very important to look at. Once you disqualify, you will be disqualified for next 4 years also.
It's a very good
The
point.
yeah, so it is in fact, how far, like how many more years you'll have to continue. So I think each year you have to look at it. Are you complying with these conditions or not? If you're not complying with these conditions, which means next 4 years also you are not going to get this benefit. So next year again you'll have to look at it. Are you complying with it or not? And then so forth.
Is it all applicable, isn't it, Balaram? All the conditions they have to
Yes,
be
it's
met.
not just one of the conditions to be complied with. You have to comply with all the conditions. You have to meet all the conditions to get the status. So if you are not able to meet at least one of the conditions, then you will lose the status of qualifying prison person.
Very good.
Yeah, that's important. So you need not to maintain or adequate substance only by you. You can also outsource your activities to a third party or a related party, but that has to be again in prison, and you have to have control on those activities performed by those outsourced entity. So this is one relaxation given to you. So in terms of meeting your adequate substance. And another important thing to look at is that even if you are a free zone company, if you are part of a large M&E group, which is subject to global minimum taxation under OECD rules and all those things, Pillar 2 is what determines that. If you are part of any large M&E with a revenue of 750 million euros or more, then you'll be subject to these Pillar 2 compliances, under which you may have to comply with higher rate of corporate taxes. It is not in effect now, but UAE is part of the OECD framework, and once the Pillar 2 is going to be implemented, all the entities which are part of this large M&E group will be subject to tax at higher rate. They will not be, giving that benefit of 0% or 9%, whatever the case now. So this is another one that we need to look at, but this is only applicable for those companies, being free zone or a mainland company, which are part of a group which is considered as a large M&E group. So I touched base on this. The tax rates given at the moment in UAE are, the general tax rules are, tax rates are 0% tax on your profit in excess of up to 375,000 and 9% tax in excess of profit 375,000 dirhams. So here when I say profit, it is a taxable income. Taxable income is nothing but your profit as per your books of accounts, and then you will make certain adjustments to that particular profit to arrive to taxable income. Now that taxable income will be looked at whether is it more than 375,000 dirhams or less than 375,000 dirhams. If it is less than 375,000 dirhams, the tax will be 0%. If it is more than 375,000 dirhams, the tax will be 9%. This is in general mostly applicable for mainland entities. And the free zone entities which are not able to meet those conditions which I mentioned above in the previous slide, they also will be subject to tax at these rates. On right hand side, you can see the rates applicable for a qualifying free zone person. So you are a free zone person company or free zone company, and you are complying with those all conditions which I mentioned in the previous slide, then you will be subject to tax with these rates. So those rates are like a qualifying income will be subject to tax at 0%. Non-qualifying income will be subject to tax at 9%. So we will look at these two classification of incomes just to understand what will be subject to tax at 0% and what will be subject to tax at 9%.
Sorry,
So,
Balaram. I mean, just sorry to interrupt you. If we want, we can keep the Q&A for later on. But there are some question when it comes to the adequate substance. No, I don't know if you checked the chat. There is Mr. Mahesh that is asking a specific question when it comes to JAFSA offshore
yeah.
company to become a qualified free zone person. The concept of the 9% when you are a free zone opting for 9% corporation tax, and how it works with the status of qualifying free zone. I mean, just let's give a general overview rather than go into specific free zones.
Sure. In fact, since we are running out of that time, Michael, let me finish the presentation and we'll look into those questions and answers. As we mentioned in the initial phase of our session, that it is going to be a general discussion, but yeah, specific cases will be looked at.
Perfect. Okay, let's leave it for later on then. Sorry.
So,
I thought it was relevant for the topic you were covering.
Yeah,
But
we will look at those questions at the end of the session, and let's see them then. Okay, so moving ahead, a qualifying free zone person, as I mentioned, if he has qualifying income, then it is going to be 0% tax, and non-qualifying income will be attracting 9% tax. So now, what will be considered as having qualifying income? So they clearly mentioned in the decision issued by the ministry. So you are a free zone company and having income from another free zone person, and your activities are not part of an excluding activity, and that other free zone person is the ultimate beneficial of the or beneficial of the particular service or goods that you sell. So as long as you have income generated out of sales made to another free zone person, and those activities do not fall under excluded activities, then that particular income is considered as a qualifying income. So if you're a free company based out uh, in DMCC and you are providing services to another DMCC company or a DSO company or any other free company, then your income will be considered as a qualifying income as long as uh, those activities that you perform are not falling in excluded activities. You look at those excluded activities list in the following slide. At the same time, your customer is the ultimate beneficiary of your service. So as long as these conditions have been met, then your income will be considered as qualifying income. And then subject to meeting the other conditions which I mentioned in the previous slide, you'll get a benefit or status of this qualifying free person, and whereby tax on your profit is going to be 0%. And second point mentioned in the decision is that you're a free company generating income from qualifying activities. And this could be generated from any customer who could be in free zone, mainland, or outside UAE, as long as those activities are not falling in excluded activities. So your activities are one of the qualifying activities mentioned by the decision. At the same time, they are not falling in excluded activities. Then your income will be called as a qualifying income, irrespective whether you are providing these services or doing business with a mainland entity or a free zone entity or outside UAE entity. So the main thing here to look at is that your activity should be a qualifying activity, not falling in excluded activities. Then you will get a benefit of the 0% tax on your profits. The third point mentioned is that other income which is subject to de minimis. So you may have an income which is not falling in above 2, but that income should be minimal to the size of your business. So if you are able to meet this de minimis requirement, which is mentioned as, what is de minimis? De minimis is your non-qualifying revenue is not exceeding your 5% of total revenue or 5 million, whichever is lower. We need to look at it like, what is your 5% of total revenue? Is it more than 5 million or less than 5 million? So if it is more than 5 million, then 5% of your revenue will be considered as de minimis. If your non-qualifying income is less than that 3%, then you are good that your total income will be considered as qualifying income. So you have to compute what is your de minimis threshold first. The de minimis threshold is your 5% of total revenue or 5 million, whichever is lower. After arriving to this de minimis threshold, now you see whether your qualifying income or income which is not a qualifying revenue, is it less than that de minimis or not? If it is less than de minimis, then you are still good. Even that non-qualifying revenue also will be considered as qualifying income, and then your entire income will be subject to tax at 0%. So this is another important item to consider to look into it. Now let's see what is considered as non-qualifying income and which will be subject to tax straight 9%. In this case, you have to remember that unlike the mainland entities where you have the benefit of 0% tax up to 375,000 dirhams and 9% tax in excess of that. So this 375,000 basic limit threshold will not be given if you are having non-qualifying income. So which means entire non-qualifying income will be subject to tax of 9%. So that is the important thing to note. So what is non-qualifying income? They clearly mentioned that revenue from immovable property in free zone. If that immovable property is a commercial property and you are given it on rent or doing whatever it is to a non-free zone person. So you have a commercial property being a free zone company and you are letting this out to a non-free zone person. Then that income becomes a non-qualifying income. Plus, you are doing the transaction with any other person. As long as that property is a non-commercial property, it could be a residential property or any other residential property or any other. So you are a free zone company and you own a non-commercial property. You are letting this out to any person. It could be a prison person or outside a non-prison person. Any income that you generate out of that particular non-commercial property becomes non-qualifying income and it will be subject to tax at 9%.
That's a very good point, Balaram, because that was included in some of those questions, like how would I define, the when it comes to immovable property,
Yeah,
a, a free zone owned immovable property, no? So
yeah,
even a revenue stream that it goes to a free zone company, that would be considered as a non-qualified income, so taxed by default at 9%. So
yeah,
that's a very good point, and it is important for free zone companies to consider that even the exchange with the mainland company or the exchange with an international entity, like especially when it comes to within the UAE territory, that would be also classified as a 9% non-qualified income, 9% corporation tax income, isn't it?
yeah, yeah. So there are only certain exceptions to this, and they've clearly mentioned here. So if you are a free zone company and having a commercial property and you are giving this on let out or you're generating income by transactions with a free zone company, so that gives you a qualifying income subject to tax at 0%. But other than that, like they mentioned here clearly, you have a commercial property, you are transacting with a non-present person, or you have non-commercial property, you are transacting with any person. Any income generated out of that becomes non-qualifying income and it will be subject to tax at 9%.
Very good. When it comes to qualifying, I'm sure you're going to cover it in the next slide. Um, I've received many questions in the past with regards to financial activities,
Mhm.
and if you can, like later on in the slide, expand into that, because it is very important to understand. Of course, banking and insurance activities are considered as such, but what
Yeah,
about the rest of activities? Like consultancy on
yeah,
finance. Like trading.
yeah. We have the
Are
list of
those
the
no?
activities. Yeah, we can definitely look at that. In the following slide, we have the activities list, so we can look at that particular issue for sure. And so, just to move on to complete this non-qualifying income definition, not only this revenue from a domestic permanent establishment and foreign permanent establishment of a qualifying tourism a company, a person, also becomes a non-qualifying income, and that will be subject to tax at 9%. So here, all that what we discussed in the first part of our webinar is going to be relevant. How do you determine to say whether you have a domestic permanent establishment or not? To say whether you have a permanent establishment outside, foreign permanent establishment or not. So it's going to be crucial for you to determine. Not only determining, it is also going to be relevant and important for you to understand what is that revenue that is going to be attributable to the domestic permanent establishment and what is the amount of revenue that will be attributable to foreign permanent establishment. So that determination also is going to be important because that particular income and profit will be subject to tax at 9%. So for a present person. So identify that whether you have a permanent establishment which could fall under domestic permanent establishment or foreign permanent establishment or not, and then determining what is the revenue and profit attributable to those permanent establishments also is going to be crucial and important. So any income that you generate out of this domestic permanent establishment or foreign permanent establishment, when I say income here, it is a profit always. So it will be subject to tax at 9%. So, Michele, this is the list that I was referring to. It's a qualifying activities list.
Very
This
good.
is the list given by the ministry. So, in the form of decision, ministry decision. So they have given the activities related to goods as well as services. So, because these are important, I would like to just read quickly. The qualifying activities are like in respect with respect to the goods, manufacturing of goods or materials. If you are into manufacturing of goods or materials in any reason, so your income would fall under or your activity would fall under qualifying activity. And processing of goods or materials, not only manufacturing, also processing is also considered as a qualifying activity. Third point is distribution of imported goods or materials in or from a designated zone to a reseller. So distribution of the goods, primarily they say that imported goods or any other material, so which has to be done within free zone. So here for this particular activity, they clearly mention a designated zone. For rest of the activities, they did not mention about designated zone. But for this particular activity, they clearly mentioned that it has to be a designated zone, activity to be conducted within designated zone. And those goods should be either from or should be dealt in the designated zone, and they should be sold to a reseller or to a customer who is going to sell it further and not going to consume internally. So this is very important point to debate on. Though it is mentioned like this in the decision, but in the recent public meeting held by FTA, they are of the opinion that it's not only that the goods should be moving either within designated zone or from designated zone. It could be in outside of designated zone also. You being a free zone company would get the benefit of this qualifying activity. So which would which I would understand that they also are trying to include for a free zone company. I don't know whether it is going to be only for designated zone companies or any other free zone companies or not. But for a free zone company who is doing high sea sale, the goods are not coming into UAE, but they are buying from country A and selling it to country B. They also would qualify to a qualifying activity, and whatever income you generate, a profit that you generate out of that business would also be subject to tax at 0%, subject to meeting the other conditions, is what they mentioned. And it's not mentioned, it's only mentioned orally. And we are waiting for further guidance on this from FTA or from ministry to be able to conclude on this particular area very clearly. But as of now, in the decision, they only mentioned this that the goods should be moving out or should be dealt within a designated zone, and that should be sold to a reseller or to a distributor. So this is very important, and it is going to affect a lot of businesses in the many of the free zones within UAE, because most of the companies they have this kind of model wherein they buy from country A and sell it to country B, not reaching the goods not being reaching or coming to UAE. So that's one of the important area to look at. And with respect to the services and others, they have given the other activities like holding of shares and other securities. If you are holding any shares or other securities and generating income out of that, that could fall under qualifying activity. Your ownership or management or and operation of ships. So if you are into this particular activity, so any income generated could fall under qualifying activities. Reinsurance services. It is not direct insurance, but it is only reinsurance service. Of course, it is subject to oversight of the regulatory body. And you are into fund management services, you are into wealth and investment management services, and you are a regulated entity, then your income or activity could fall under qualifying activities. Headquarter services to related parties. So if you are acting as a headquarter and providing services to related parties, so your activities could fall under the qualifying activities. Treasury and finance services to related parties. So it is specific to the related parties, not otherwise. Financing and leasing of aircraft, including engines and rotable components. So the financing and leasing of only aircraft, not other products or other services. Last but one point is that logistic services. If you are providing logistic services, and your activity could fall under qualifying activity. So, Michele, here one important thing to note here is that they have mentioned the activities, but what kind of services would fall under this specific activities is again a question mark.
Okay,
It's not
okay. So it has
defined
to be
elsewhere.
expanded.
Yeah, it's not defined in the law clearly. In some places, they have given reference to the other laws or acts within UAE, but in some other activities, it is not mentioned or not no reference is given. So then which gives us the freedom to interpret, and that interpretation could be questioned, and in some places we may get end up with a wrong interpretation. So we need to be very careful in determining which service will be falling under these activities and which could not fall under. And the last important point or interesting point that we mentioned is that any ancillary activity related to any of the activities mentioned above could also be considered as a qualifying activity. So here when I say ancillary activity that will not be conducted on an independent basis, which is dependent on the activities mentioned above. So for a manufacturing company, providing service as part of my warranty to those particular products that is manufactured could be ancillary.
Mm.
So that activities could still be considered as a qualifying activity. On the other hand, an independent company which is providing the same service or repair or maintenance services of the products, then that will not be considered as a qualifying activity because it is their main activity and it is not an ancillary activity to any other qualifying activity. So that's the
Yeah, but
difference.
I mean, the concept of ancillary is it's good to expand. I mean, it's good to give an example when it comes to, as you said, maintenance or even logistics, even like delivering goods. No, when you when you sell again televisions, and you need to deliver this television, that would be ancillary to the sale of the product, isn't it? But when you are yourself a logistics service that provides delivery service, that would be the main activity for yourself, isn't it?
Yeah, that's right. That is what we have to look at carefully.
The
So,
difference.
yeah, so, but at the same time, it should not be operated as an independent activity. So it has to be
Exactly.
purely ancillary to your main activity.
Yeah.
As long as that particular main activity is falling in these qualifying activities, then that ancillary activity could also be considered as part of qualifying activities. So it is very specific and very limited definition that we have to look at. So this is a list of qualifying activities, and we have excluded activities. So I'm not going to get into details of this. Transactions with natural persons generally are considered as excluded activities. Only thing is that even if you provide services to natural persons, but if they are falling in any of those activities mentioned in the bracket, like ownership or management of ships, fund management services, wealth and investment services, financing and leasing of aircrafts. So if these services are provided to a natural person, they still will not be considered as excluded activities. Other than them, any service provided, any transactions done with the natural persons will be excluded activity. Banking activities is an excluded activity. Insurance activity other than reinsurance, financing and leasing activities except financing to related parties and financing to related to aircrafts. So any other financing will fall under excluded activities. Transactions with another prison person related to immobile commercial property other than located in free zone will be excluded activities. So you are a prison company, you are having properties outside free zone, and they are commercial properties, then they become excluded activity. Intellectual property assets income, exploitation, or if you're getting any income out of IP, intellectual property assets that you have, so that becomes excluded activity. Needless to say, any other ancillary activity to the list given above will also be considered as excluded activity. So the importance of excluded activities is that it is a kind of negative list of activities. If you conduct any of these services or business transactions, then by default you will not be considered as conducting or having qualifying activities. Then you will lose the benefit of the status of the qualifying prison person, and then you will be subject to tax at normal rates of 0% and 9%. So this is what is important. So we always need to look at what is our business, to whom are we providing these services, and then decide whether we will be getting the benefit of 0% tax or not. So as we discussed, if you have a non-qualifying income, and as long as that non-qualifying income is less than your de minimis threshold, then you are still good, subject to meeting other conditions, to get the benefit of 0% tax. But if your non-qualifying revenue is exceeding this de minimis threshold, then you will lose the benefit of this, or you lose the tax status of your qualifying prison person, and then you will be subject to tax at normal rates. So I have mentioned this clearly that what is your de minimis threshold. De minimis threshold is 5% of your total revenue or 5 million dirhams, whichever is lower is considered as de minimis threshold. And if your non-qualifying revenue is less than that, it is still good. If it is exceeding that, then you lose the status. For the purpose of computation of this total revenue, for de minimis requirement, the listed activities revenue will not be considered. Okay, so that is revenue from immovable property in a free zone out of your commercial property transacted with non-prison person and transactions with any person for a non-commercial property, plus revenue from domestic permanent establishment and foreign permanent establishment of a qualifying prison person. This will not be considered for computation of your total revenue. This also will not be considered for de minimis requirement. This income we have seen in the previous slide that it will be subject to tax at 9% rate. And this is not going to be considered for any other computation, nor even for considering whether you are going to be considered as a qualifying income generated person or not. So I'm rushing this. So this is a pictorial representation of the same thing. If you have a qualifying income, which is the size of this elephant, and you have a non-qualifying income, the size of that particular data mouse, which is less than your de minimis threshold, you are still good to get the benefit of this qualifying prison person status.
No, very good point.
Yeah. So this is the last point in my session. Like we have discussed this already, but I just wanted to put it in a different way for ease of understanding. Let's say you're a prison company and your source of income is to be looked at. How are you getting it? So your source of income is coming from a non-prison person. So your customer base is non-prison persons. As long as you're generating income from only qualifying activities, and then you will get a benefit of 0% tax. This is how we have to understand. So you are a prison company, your income is generated out of transactions with non-prison persons, and your activities are qualifying activities, then you will get a 0% tax benefit. Okay? And you are a prison company and your customer base is a non-prison person. You also have non-qualifying activities. Now you need to look at whether those non-qualifying activities are less than your de minimis threshold or more. If it is not exceeding de minimis threshold, then you are still good. You will get a benefit of 0% tax. But if your non-qualifying activity income is more than your de minimis threshold, then you will lose the status of qualifying prison person.
No, fair enough. I mean, the concept is very interesting because it all goes around the source of income to be qualified as a free
Yeah,
zone, no?
yeah,
And the interaction you have with a non-free zone person as opposed to a free zone person. And,
yes,
and, and those is breaking down into excluded and qualifying activities. So it is sometimes difficult, somehow difficult to identify, especially when it comes to qualifying activities, what are the specific guidelines. Okay, you got a decision, a ministerial decision, but there is no a clear cut, isn't it? That's the difficulties when it comes
yeah.
to determine those activities.
That's
And
right. So, yeah,
and how would you uh, advise, a client who's asking you like, look, I'm unsure between qualifying and non-qualifying activities. I'm actually, if we go back to the qualifying activities, no, uh, you know,
yeah.
I can see, for example, services, fund management services. Okay, what would be the difference between like those fund management services and finance activities? Like is it trading service? How would you define it? Like.
Yeah. So here, your service provider who is only providing fund management services, you're only advising your clients. You
Mhm.
are not involved in the finance activity, financing activity as such. So then your service or activity is considered as following qualifying activities. Not only that, they clearly mentioned that you should have a license to that particular specific activity and you should be following the regulatory requirements
Okay.
providing those services. So there is a very fine line, nothing line to understand and to determine whether you are conducting the qualifying activities or not. Unless you are specifically conducting those activities mentioned there, it becomes challenging to understand and determine.
Okay. It's difficult to determine. Okay. No, that's fair enough from my end. I
Yeah.
don't know if we want to, if you have anything else to add in
No,
there,
I
but
just have one last thing to add. That, since we are struggling now, it is not very easy to decide or understand how to classify whether me as a prison company is going to be subject to tax at 0% or not. So there are few steps that we can follow just to determine. This is used elsewhere as well, so I'm just taking the same. First thing to identify is to know what is your company. Is your company a prison company or not? In step one. In step two, then you will look at your customer base. So what kind of customers do you have? Do you have customers who are in free zones? Do you have customers who are outside free zone?
mhm.
Because that is also going to be relevant for you to decide. And next step is to look at what kind of activities do you conduct. First thing to look at is that are you conducting any activity which is falling in exclude activity? Because that is a negative list of activities that could push you into non getting a benefit of 0% tax. So are you conducting those activities? If not, then you come to the other list of qualifying activity. Are you conducting those qualifying activities? If you're conducting those qualifying activities, then there's a probability that you would get the benefit or get the status easily by complying with other conditions.
Mhm.
Then after identifying all this thing in step four, then you'll decide what is your tax status going to be. Whether you'll be eligible to look for qualifying free zone person status or you not. Whether your income will be subject to tax at 0% or will it be subject to tax at 9% straight, or will I lose the status whereby I will be subject to tax at 0% and 9% like any other mainland entity. So this is how you have to analyze your business structure and business, then come to a conclusion about the taxability of a company. So this is what I wanted to cover as part of the session. And since we have very lesser time or limited time to address, but yeah, now I think I hand it over to Pratiksha if she wants to take it over to take hand in the question and answers. And
Yes,
but
sir.
before
Thank you.
we get into that, we will try to make sure that we'll address all your questions. You can leave your email ID and your question. If we must be having your email ID, but if not in this chat box, you can leave your question and your email ID. So we'll try to get back to you. Alternatively, you can send us your emails to either info@spectrumaccounts.com or to info@well-tax.com with your specific question. We'll try to come back to you because whatever we say here, whatever we conclude here may not be appropriate because we'll be looking at the points with a limited understanding. So the conclusion could go wrong. Though we tell you some conclusion here in the session, but we still need to relook at that by considering the entire relevant points for that particular issue, then conclude on that by looking at the tax rules. So this is a caveat that I want to leave here. And yeah, now over to you, Pratiksha.
Thank you, sir. So we are having certain questions raised by participants here. So one question raised by Mr. Avinash is, if a foreign company is resident by management in UAE, then how will be the tax as a free zone or a mainland company?
Yeah, so I think this particular point, if you are becoming a taxable person in free zone, particularly in mainland, anyways, if you are a PE here, then you will be subject to tax at normal rates and all those things. 0% to 9% will be applicable. But very important thing to look at is that if you are considered as a taxable person through PE in a free zone, then the important thing to look at is that will you get a benefit on the 0% tax or not? It's not very clearly mentioned in the decisions or in the law, but I think in the question and answers or FAQs mentioned by the Ministry of Finance, they mentioned that if you are subject to tax, being taxable person through PE in free zones, you will not get the benefit or status of qualifying free zone person. I think which would be taxed or subject to tax at normal rates of 0% and 9%. But yeah, I still suggest to wait for the guidance because in the meeting mentioned conducted by FTR earlier, they clearly mentioned that they're going to come up with all the relevant guidances to help each one of us to understand and interpret the law clearly, and it is going to be helpful for us. So I still recommend you to wait for that particular decision guidance notes.
Okay.
Okay. Another question is, will all the free zones, offshore and foreign resident companies are required to register for corporate tax?
We did not cover that area here in this, but yeah, all the entities in free zone as well as in mainland, as well as non-resident persons, if they become taxable persons, are expected to go for registration and comply with written filings.
Next question is from Mr. Mahesh. He says, what's an adequate substance for a Java offshore company to becoming a qualifying free zone person?
It's a tricky
question for you, Balaram.
I know, yeah. But yeah, so it's a little tricky to understand. See, the basic purpose or objective of having offshore entity is to conduct very limited activities. Okay, so they are limited only for your investments primarily. So if we are a offshore entity, the basic understanding is that you are an entity registered in UAE. Okay, so which will be subject to tax in UAE. So then, next thing to make sure to get the benefit of this qualifying prison person status is to comply with the conditions mentioned there. One of the important conditions to meet is maintaining adequate substance in UAE or in free zone, to be particular. So the substance need to be looked at in consideration of the activity of the company. If you are conducting a particular activity, whatever employees or whatever ownership you have or whatever office you have here in free zone, is it sufficient enough to conduct that particular activity? If that is being met, then you are considered as having uh, substance in UAE. So if you are an offshore entity, if your offshore entity is investing in in entities or in properties, I don't think you need to have a number of employees and have a separate office to maintain and all those things. Okay, if you have limited investments in one or two immovable properties, then it could still be considered as having substance. But if you have not too many investments in various properties, and then you have to have you have to involve more number of people, and then obviously offshore entity may or may not be allowed to take any employees. In which case, are you outsourcing this particular activity to a third party, and those third parties are in free zone or not, and do you have enough control on those activities or those outsourced entity? If you are able to take care of all these things, then you may still be considered as having adequate substance in you. So this is how we need to look at it. It is a gray area, but still you need to establish by looking at various factors and see that do you have enough substance in comparison to your size of business and activity that you conduct. It's always a relative term to look at. Yeah.
Okay, thank you. He also asked that if a free zone company opts for 9%, then can that company get the status of qualifying free zone person for 1 plus 4 years?
So it's again related to those conditions to be met. One of the
Conditions.
conditions they mentioned clearly in the qualifying fusion persons is that you as a fusion company should not be going to elect to be subject to tax at normal rates, which is 9% and 0%. So if you are electing that, so which also it turns out to be not meeting those conditions. If you're not meeting the conditions mentioned in that slide which is presented, then you will lose the status of qualifying prison persons for that particular year, and also for future 4 years. So if you opt for this particular option, then I think that you will lose the status for this year as well as for next 4 years.
Okay. Thank you, sir. Our next question is from Miss Marcia. How would you know that at the setup of the company is your customers will be based in free zone or not if you're a startup? Oh, sorry. How would you know that at the setup of your company is your customer base would be based from free zone or it would be from other places?
Yeah, so it's a basic thing of
I
yeah. So what do you say that how do you know that if a customer is a fusion company or not? I think so far we are not very particular to look at that, but now it is important for us to look at that and to identify whether your customer is a fusion customer or company or not. If you are a fusion company and planning to get the benefit or status of qualifying fusion person. So this is a documentation requirement that we need to maintain and we need to determine that.
thank you. Next question is from Ashwini. She says our head office is in Germany and we are the branch office look after complete GCC. So our office is located in Free Zone and Dubai Dubai land license. They are having license in Free Zone and Dubai as well, and pay tax under LLC company and Free Zone as well. And is a listed group of company. How can they register for corporate tax invoice from Free Zone LLC companies? I think this is a quite big
Yeah,
question
so
and requires a lot of
out of what I understand is that
information.
it's part of a group and they have a license in free zone as well as in mainland. If that is a
Yes,
question, yeah, so both
yes,
are
yes,
independent. They
yes.
are operated effectively being managed and controlled from UAE, and they'll be subject to tax independently, like the mainland entity separately and free zone entity separately. You have to comply with all those requirements of free zone persons and all those what we have discussed to get the benefit of 0% tax. But
So
yeah,
that
one
would
important
be,
thing to note
yeah,
here,
the
yeah,
approach would be the same. No,
yeah,
qualifying. If you qualifying, you paid zero tax. If you're from mainland, you applied the 9% default
yes,
rate.
yes, that's right, yeah,
For, I mean, unless you don't go above a specific threshold, etc., etc. I mean, that's what we talked about essentially.
yeah, true.
Okay. Is there
Any
anything
other?
else? Because I mean, this is a very specific question. I'd say like those specific question, as Balaram said, will be appreciated if like in case you can send an email to Spectrum or to Welltax and organize your consultancy sessions on this. We make sure that no stones are left unturned, isn't it?
Yeah, yeah, true. Uh, so do we have to
Okay.
look at more questions or because now we are running out of time in the interest of others' time as well? Should we take it forward to address the
I'd
question?
say, you know what,
I think we
Balaram,
are
yeah, let's keep it as it is, and then in case, I'm sorry to interrupt you guys, in case they'll approach us by email if they want to ask any further question. What do you say?
Yeah, yeah, that's right.
All right, perfect. So again, thank you very much for for being here to listen to us, and again, thanks Balaram, and big thanks to Spectrum and Welltax for being hosting the webinar today.
Yeah, in fact, indeed, thank you very much, Michele, for being a part of this, and thank you to your team as well. We're looking forward to provide services more and more to our clients in UK and to our clients in UAE, both, whatever we have from both of us. I look forward for more sessions. We conduct more sessions on specific topic basis, as Michele was mentioning earlier. And thank you all for participating in this, and we look forward for more interaction in future.